Hey, soldiers, let's talk about Silicon Valley Bank, how it happened, why it happened. This thing is just getting started, really, and it's got the potential to infect other banks with similar profiles. Now, look, I don't believe as of this moment, it's the 12th of March at 3:14 p.m. Eastern Time, I don't believe at this moment that this is going to spread into the larger banks with the national profiles, but the regionals, depending on how they're doing business, who knows? All right, look, let's get into the mechanics of it. It's pretty easy to understand. Now, what happened is the Federal Reserve has been hiking interest rates, and they've been doing it at a pretty prodigious clip. Okay, we've had 8 interest rate hikes in the course of a year. And of course, we know that the rationale behind that, at least what the Fed says, is that they're trying to slow the economy down, to slow inflation down, right? That's going to come with a host of other problems, but that's reality. That's what's been happening, right? So banks, over the course of the past year or so, they've been putting money into treasuries. Now, those treasuries were the returns were hovering around 1%. All right, safe, but not really setting the world on fire, right? So when you saw rates starting to go up, people who had deposits in banks like, Silicon Valley Bank, they decided, hey, I can take my money, since these rates are going up, I can take my money and I can get a better return on it elsewhere. Okay, so the treasuries now, they're paying closer to around 4%. And 4% is a better return than 1%, right? You want your money to work as hard for you as it possibly can. So, folk pull the money out. They went for the higher return, naturally. All right, so that caused funds to come out of the Silicon Valley Bank. Those funds came out, and, the rest is history. The dominoes fell after that. Now, Silicon Valley Bank is one of these institutions. I do not know when these companies are going to get it through their heads that the woke crap does not work. All right, it doesn't work in entertainment, and it doesn't work in banking. Now, Silicon Valley Bank, they pushed a lot of progressive woke programs. And look, I'm not saying that if you want to follow that path, fine. But here at a business, let's have our number one objective on building this business, and the rest will take care of itself. If you come into this business and we're hiring the best people for the job, no matter who they sleep with, no matter how they look, no matter what color they are, no matter what gender they are, we're just hiring the best people for the job, right? All right, so we all come in here and we prosecute business. We put our minds on the mission, right? That's it. To the extent that these companies keep on pushing this woke agenda and taking their eye off of their core businesses, they can end up in a situation like Silicon Valley Bank. A head of risk management at Silicon Valley Bank spent considerable time spearheading multiple woke LGBTQ plus programs, including a safe space for coming out stories, as the firm catapulted toward collapse. Now look, if you want to, come out and say, hey, I'm this or I'm that, hey, do it. You're an adult, do what you want to do. All right. But is that something that we should be taking time out of the business day to promote, creating a safe space for you to do this? This is a bank. This is not some sort of counseling service, right? All right. So I'm not even sure that it's healthy for the bank to be setting up this type of infrastructure to help people with their psychological needs. Ersapah, I hope I'm pronouncing that name correctly, the boss of financial risk management at SVB's UK branch, launched initiatives such as the company's first month-long pride campaign and a new blog emphasizing mental health awareness for LGBTQ plus youth. Wouldn't it have been a better use of the financial risk management boss's time to maybe steer people in the direction or provide some information where they can go and interact with a program or an institution or organization specifically designed to care for these things? Financial risk management. That title makes me think that their job should be financial risk management. Risk, like having the FDIC take over your operation. Risk, like, having your depositors, no matter how much money they have, only get $250,000 back at the end of the day, right? The phrase, "you can't be what you can't see," resonates with me. This is a little poetry that Ersapah put out there. That's a quote from Jay Ersapah. Again, the head of financial risk management at SVB's UK branch. Quote, "As a queer person of color and a first-generation immigrant," so checking all the boxes, "from a working class background, there were not many role models for me to see growing up." This is getting tired. And look, the proof is in the pudding, right? It has not worked out so well focusing on these types of things at SVB. Her efforts as the company's European LGBTQIA+ employee resource group co-chair earned her a spot on SVB's outstanding LGBT plus role model list 2022, a list shared in a company post just 4 months before the bank was shut down by federal authorities over liquidity fears. Liquidity fears, it sounds like a risk issue to me, something that Ersapah should have been focused on, right? And I know some people are going to say, "Oh, you can walk and chew gum at the same time." You can. But I'm not sure I want you chewing gum when you should be walking in terms of, again, doing the job that you were hired to do. How do these initiatives make money for SVB? And I'm not saying that people don't have a right to endeavor in what kind of activity they want to, whatever kind of activity they want to, as long as they're not hurting anybody else. But look, do it on your own time. In addition to instituting SVB's first safe space catch-up, which encouraged employees to share their coming out stories, and serving on LGBTQ+ panels around the world, Ersapah also spent time over the last year serving as a director for diversity role models and volunteering as a mentor for migrant leaders. Okay, and all the while, this issue is, we went over it in the beginning, how the, variance in the interest rates and the treasury returns is a growing problem. How much time did Ersapah spend looking at that, warning her superiors about that? Quote, "I feel privileged to co-chair the LGBTQ+ ERG and helped spread awareness of lived queer experiences, partner with charitable organizations, and above all, create a sense of community for our LGBTQ+ employees and allies." Look, I own businesses, my wife and I. And again, I stress, we don't care, and we got people that can attest to this, we don't care what you're out there doing, as long as you're not breaking any laws, right? Okay? But again, you can sleep with who you want, as long as it's another consenting adult. Or, hey, if you're sleeping with multiple consenting adults, that's your business. We're here to sell product. We're here to serve our clientele and build value. And as long as you are the best person for the job, all of that other stuff, hey, just bring it with you if you want, but we're not going to get into that, in the company. Ersapah couldn't be reached for comment. Of course not. Not now that the bank has been taken over by authorities, right? She's not willing to answer any questions about this. Of course, we know SVB was abruptly shut down Friday by California's Department of Financial Protection and Innovation shortly after it disclosed it had taken a $1.8 billion hit from a $21 billion fire sale of its bond holdings. It faced a cash crunch due to surging interest rates, like we said, and a recent meltdown in the tech sector led many customers to pare their deposits. SVB Financial, the bank's parent company, their shares plunged a whopping 60% on Thursday. The shares were halted in trading late last week. The stock was down by another 60% in pre-market trading Friday until being halted. On Saturday, Home Depot co-founder Bernie Marcus insinuated that woke policies like the ones launched by Ersapah could have led to SVB's dramatic failure. Well, we do know that she was spending a lot of time on things other than Financial risk, right? And look, it's not like she was out there doing this stuff under her own banner. You know, when she got off work, she had some projects that she was working on. Fine. She's doing this under the auspices of SVB. She's doing it under that banner. Quote, I feel bad for all of these people that lost their money in this woke bank. You know, it was more distressing to hear that the bank officials sold off their stock before this happened. That's right. They surely did. It's depressing to me. This is what the co-founder of Home Depot said. Who knows whether the Justice Department will go after these people, these executives that sold stock just before the company collapsed. They're a woke company, so I guess not, and they'll probably get away with it. Isn't that something? Isn't that something? They knew that bank was going downhill, and they got out while the getting was good. I bet you Ersapah probably traded in some shares. Allegedly, you know, we can't prove that. It's just speculation. Some people in the comments say, you're speculating. Yes, I am speculating. If I had rock solid proof, I would be recording this from my G5. Yes, I am speculating, okay? Which is, you know, this is part of what we do. We're looking out, reading the tea leaves, trying to figure out what's going on so we can better handle our money, right? And not lose it with a woke bank like SVB. All right, Marcus, the co-founder of Home Depot, went on to say these banks are badly run because everybody is focused on diversity and all of the woke issues and not concentrating on the one thing they should, which is shareholder returns. Instead of protecting the shareholders and their employees, they are more concerned about the social policies. And I think it's probably a badly run bank. This is, again, what Marcus said. They've been there for a lot of years. It's pathetic that so many people lost money and will not get it back. All right, guys, so the impact of SVB's collapse is not clear just yet. We're going to be doing a lot of reporting on this. Experts theorize it could impact the future of regional and mid-sized banks across the country. And who would benefit from that? The big banks, Goldman Sachs, JP Morgan Chase, Bank of America, Wells Fargo even, with all of its shenanigans. All right, guys, take a look at this video we did. You are not going to believe how Roku got wrapped up in this and lost $500 million. Talk about bad management. Was Roku? I wonder what they are concerned with for most of the day. Is it some of these woke policies also? Take a look. Guys, I'll talk to you soon.